Hi, this is grade 12 accounting tutorial. In this tutorial we'll be dealing with accounting concept on unique ledger accounts. This is a term 1 work. Let me first explain what is ledger account. Ledger account is also known as T account or double entry principal account or double entry principal entry. For you to understand which amount goes to which direction or which amount goes to which side, you have to first understand what is called accounting equation, or assets equals to equity plus liability. I'll explain assets, equity and liability in a short brief. So, accounting equation come from financial statement, more especially income statement and balance sheet statement. The question is how? Let me first explain income statement or statement of comprehensive income. You can say statement of profit or loss or statement of financial performances, but it's income statement. Income statement reveals the total revenue and expenses of the organization. So I simplified this by highlighting the revenues or the income with the yellow color, whereas the expenses are highlighted in red color. Bear in mind that all expenses increases on the debit side and decreases on the credit side. But it's not similar to balance sheet statement. Once an income decreases, automatically turns into an expenses. But once expenses increases, automatically turns into an income. Let us take an example. Let me make an example of bad debts. When you're talking about the bad debt, we are talking about an insolvency customer or a irrecoverable customer. That means we granted a customer goods within 15,000. He or she won't be able to pay that 15,000 back again because of the liquidity, or maybe the business contract is over, but he or she won't pay that 15,000. We have to debit 15,000 with receivables, since by that day he took that goods, we didn't record 15,000 in bank account. We record it in receivables or trade and other receivables. By the time the customer pays, let me say the customer pays an amount of 2,000. We won't say receivables and credit 2,000. We rather open a bad debt recovery. Remember that bad debt recovery is an income. That's what I said. If a bad debt is credited, it automatically turns into an income. Now the bad debt recovery of 2,000 will be recorded in the income column. And now we are not crediting receivables anymore, but we rather credit bank, since that 2,000 goes straight into bank account. Let us take a second example of expenses. It's depreciation. Remember that a depreciation is a devaluing of assets over its useful lifetime. Once depreciation arises of 2,500, it has to be added with other long depreciation or other occurred depreciations, and once it's added will be called accumulated depreciation. In other words, when talking about a depreciation, we are talking about a current year devaluing, but accumulated depreciation, we are talking about the previous year's devaluing of assets. Once a depreciation has been recorded with 2,500 on a debit side, it has to be added or credited with depreciation of 2,500 under the T column of accumulated depreciation. This is what you call accounting equation or double entry principle. Last but not least, the expense I will treat is income tax. Income tax is charged by SARS to the business. Since it's an expense like other expenses, increases on a debit side, the contra account is SARS income tax. You have to know that SARS income tax goes to a balance sheet under a current liabilities. So you have to credit SARS income tax with income tax of 20,000. This is a double entry principle, also known as accounting equation. We are now moving on to the answers platform. The first question says our business paid 8,000 for the annual rent. In other words, we are paying rent. This is rent expense. Remember that I said all expenses increases on the debit side and decreases on the credit side once they turns into income. So we are going to debit rent expense with bank, since that amount of 8,000 decreases our bank account. And then on a double entry principle, we are going to credit that rent expense of 8,000, since our bank account has decreased on the credit side. With 8,000 that goes into rent expense. Second question says salaries for the year amount to 250,000 rands. The first approach is that we are going to debit salary. Remember that salary is also an expense that goes to the debit side, bank of 250,000, since our bank decreases with 250,000 once we pay our employees. Contrawise, or double entry principle, is that we are going to credit bank with salaries of 250,000 rands. (1.3) Taxation for the year amount to 54,050 rand. To treat this is that income tax comes from income statement. It's an expense. In fact, we already did the transaction of this nature, whereby we are debiting income tax with SARS income tax, but now it's 54,050 rand. Double entry principle is that we are going to credit SARS income tax with an income tax of 54,050 rand. all transactions under this video mostly are for expenses. Other video will show you how to treat income as well as assets, equities and liabilities.